Happy Wednesday to you. Thank you so much for joining us. I'm Marlon Bowling with you as we watch your ag commodity trade. Get ready to open things up on our daytime session here at the bottom of the hour. In the meantime, let's bring in Rich Nelson of Allendale Incorporated, and he is based in McHenry, Illinois, and he joins us right now. All right, Rich, first of all, before we get into our daytime trading session here, a little bit of news from USDA, not the stuff that came out yesterday. We'll get to that in a moment. This is stuff that just came out just moments ago. It is an overnight export sale reported by USDA. This time around, the winner is the corn. We sold 253,300 tons of corn, in fact, to Mexico for 2017 and 2018. You know, for all the talk that we've heard in the political realm here over the past 6 months or so, it seems like the Mexican business seems to be fairly firm here on the corn market here lately.
I think you have to assume that for right now, most of those buyers are still favoring U.S. product, as they should. You know, they are a traditional buyer, or 94 to 97% of their imports are generally the U.S. And even if they do diversify to Brazil, they're probably going to be dropping down to at best maybe 92, 90% from the U.S. So some which we watch here very closely, but as it stands, probably not any major changes coming for their buying patterns here.
Still a very big market, and of course that was a big factor for today here with 253,000 tons announced. Overnight, the corn was a little bit weaker. Looks like December corn was down about 1 1/4 penny at 357 1/4 at last check. I do want to revisit yesterday afternoon's USDA crop condition and crop progress summary here, and if we take a look at our corn condition nationwide, it did actually decline 1% in the good to excellent rating. We're down to 61%. Soybeans just maintain the status quo. They're also at 61% good to excellent. Cotton also unchanged. They remain at 65% good to excellent, so not much change there. Some folks thought maybe we would see a decline in that cotton condition with the ramifications of Harvey along the East Coast, but this is a summary of the national numbers. So, you know, it's possible some areas had increased a little bit and averaged that out. Now, grain sorghum condition went down 2 percentage points to 63%, and the rice went down 1 point to 71% good to excellent. I did want to take a look at that I-80 corridor for corn and soybeans, and I see where in Nebraska and Ohio, the condition remained unchanged from the week before on each end of that I-80 corridor, but in the middle, in Iowa and Illinois, on the corn, we went up 2 percentage points. Indiana went down 1 point. And if you look at the soybean condition in that same stretch, you had Nebraska going actually down 1 point. You had Ohio staying unchanged, Indiana unchanged, but in the middle again, Iowa and Illinois picked up 1 percentage point. So actually a slight improvement there, kind of in the central Corn Belt area.
Certainly right here. Good point regarding those. And this recovery here for Illinois, for instance, does come after they had that very tough week last week where they did drop conditions a little bit here. So good to see some recovery here, and hopefully this does portend maybe a little better yield discussion than what we found on that nationwide survey here last week. So good news on this report for us here.
And let's go ahead and take a look at our soybean trade overnight. In the soybean trade, we have that new crop November contract just down 1/2 cent at 9.68, so fairly steady there. Looking at the wheat trade in Chicago wheat overnight, we had December down 1.5 pennies at 441 1/2, and we have the Kansas City market on December trading 3/4 lower at 444 1/4. Meanwhile, on the Minneapolis wheat, you had your December up 3 at 632. That's interesting. It kind of reversed the trend from yesterday, so everything kind of washes out there. So up 3 cents there. The cotton market that had been surging earlier had a gain of 15 points in December, but all the deferred's a little bit weaker. Rich will bring you back, and we'll talk a little livestock trade when we come back right after these messages. Don't go anywhere. We are talking with Rich Nelson. He is with Allendale Incorporated in McHenry, Illinois. We talked about the grain side in our first segment here, and we'll get to our livestock trade here in just a second. One big thing that moved yesterday was the dollar value and had a big decline. And let's take a look at what the last quotes have been. Fairly steady there on the September. December also fairly steady. Crude oil trade here, if we look at what has been taking place there, it had firmed up about 58 cents in West Texas crude at 49.24 per barrel. Let's go ahead and talk one more time here with Rich Nelson of Allendale Incorporated. You know, we were talking earlier about the grain trade, and I wanted to get your thoughts real quickly here. I was seeing where we had an update on commodity fund positioning, and it sounds like the interpretation is they actually bought quite a few of the grain contracts on the corn, soybeans, and wheat and meal yesterday. Is that right?
That sure is right. Overall, we did see some buying going on, which we did not really expect to see in any numbers here yesterday. And on the soybean side, this comes after 5 straight weeks of good selling going on here. So as far as this rebound, people might be now speculating this could be a potential bottom here, or maybe one of those early harvest low discussions. Maybe a little too early to make that call yet, but certainly good to see some type of change now in this narrative.
So can you discover any trends in their fund positioning on the livestock side here?
You know, on the livestock end, on the cattle side, it has not been really matching up too well with the numbers as far as the price action. But over on the hog side, maybe we can make some discussions there, especially we can point out that certainly for the hog end of things, we've had a lot of discussions about these guys maybe flip-flopping and maybe having some small amount of buying. As of yet, though, they were still selling here as of the past couple of weeks. In fact, 11,500 contracts in the most recent week. So I can't see any major buying changing this trend yet on the hogs.
Okay, now we had state pasture condition ratings that came out from USDA yesterday afternoon along with our crop ratings. And here's a look at the plains conditions. Actually, a bit of a surprise where we had Texas improving 2 percentage points. 51% rated good to excellent. Now, keep in mind, this is encompassing the entire state, all the state. Yeah, we had a lot of flooding in the east, but overall, the state condition did rise by 2 points. Now, Oklahoma went up 3 percentage points in their condition rating, 65% good to excellent. Kansas went up a point. Nebraska also up a point. So if you look at the southern half of the plains, a little improvement in pasture conditions. Now, let's move further north, if you will. And starting in Missouri, we actually went down 5 points in condition to 56% good to excellent. South Dakota stayed the same at 16%. North Dakota down another point, down to 8% good to excellent. And how about Montana, down 3 points, all the way down to 5% good to excellent on their pasture land. Just incredibly poor conditions there, 73% poor to very poor. Minnesota unchanged at 58%. So that's the latest on our state pasture condition ratings. You were talking about the impact of the commodity fund positioning here on the livestock trade. Now, we did have a big bounce here in the hog market earlier this week. How high does that dare to go? And I know you had mentioned earlier this week, Rich, about the opening of a couple more processing plants.
That sure is right. The 2 new ones here for for both Sioux City, Iowa, as well as the Coldwater, Michigan plants here certainly could add a little support to this market. Also, this comes right at the time we have that normal seasonal small 2-week rebound in the hog futures based on this National Pork Month procurement. So that could be seen, and we can certainly argue that perhaps yesterday's good rebound on the futures end was the start of maybe some of this good news here.
Do you think the purchasing for that National Pork Month will wrap up here in a couple of weeks in?
You know, it often does get, it's mainly on the first half, if not maybe first 3 weeks of October. So this procurement is really going to be more heavy focused in the month of September itself, maybe into the first week of October, but really as a whole, this is more of a September procurement period here.
Okay, thanks, Rich. Good to talk with you again. Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're getting close, Christina, a little over 5 minutes away from the opening bell.
Yeah, and coming off of the crop progress condition reports, we'll have to see how the markets react.
Yep.
All right, thank you so much, Markets Editor Marlon Bowling.